done correctly, the tax aspect of things could put more money in your pocket than any other thing you do. More than selecting the great stocks or the great mutual funds or the great annuities, it can add more money to your pocket than anything else. And there are real plans to get there. It just depends on what you want to accomplish.
The OBBA is bringing in new tax breaks for people over the age of 65 as of this year, as of 2026. But do these tax breaks apply to you? Let's discuss. Let's talk about one rule specifically that's happening this year.
Yeah.
A new tax break for seniors that could make a real difference thanks to the One Big Beautiful Bill Act. Anyone 65 or older can claim, I'm saying anyone with an asterisk, this is where I want you to check me, John. Anyone 65 or older can claim an extra deduction, $6,000 for singles, $12,000 for couples, that on top of the standard deduction. So this creates a nice perk for seniors. However, how does this deduction work for those at higher income levels? Because it doesn't necessarily apply to anyone over 65. Is that correct?
Correct. It phases out. Yeah, so the great thing about the OBBA, it did a few things that I think are going to be very attractive for the average retiree. So if you have a household income of under $150,000 married filing jointly or under $75,000 for an individual, you basically get a stackable $6,000 for an individual or $12,000 for a couple in deduction. So you add that onto your standard deduction and other deductions you have, charitable giving, all those kind of things. That is great, guys. That's really good. We haven't seen it that high. So we're creating an environment now where your standard deduction plus this extra $6,000 per person really kind of gets very good. If you have a household retirement income of, let's say, 60 grand, you could potentially pay no taxes or very limited taxes, depending on what state you live in, for the whole year, which is pretty remarkable when you kind of think about it. And then, of course, also, it basically reduces the amount that we may pay on Social Security taxation or even IRMA, which is the Medicare extra tax. Now, what we run into all the time, though, is people that are saying that I'm about to retire, John, or I just retired. My taxes are simple. I don't need to worry about all that. Let's think about that for a quick second. When people say I'm about to retire or I'm retired, it's like, well, it may not work exactly the way you think. It's like, well, my income's real easy. I was like, perfect. So when you were working, where did your income come from? Well, I had a W-2 from my employer. Excellent. Did your spouse work? Yes, they did. Did they have a W-2? Yes, I did. Guys, that means you have two basic pieces of paper, and that's what you put on your tax return, and that's what you pay taxes on. That's easy, and that's when you're working. Now let's think about retirement. In retirement, do you get Social Security income? What about pension income? You get interest paid from banks. How many different banks? Did you pull money from your IRA? Do you have more than one IRA? What about a Roth IRA? All these different things. Do you have rental income? Do you ever do depreciation deductions? Do you own any real estate? All these things that happen when we're in retirement, believe it or not, it creates a more complex tax environment. Is that bad? No. Not at all. I love the complexity. I think the complexity is good because it gives us a lot of opportunities to massage the tax code correctly, and it means exploit. We want to be exploiters of the tax code. We're not doing anything wrong. We just want to utilize it to our best ability so that we keep more of our money and keep Uncle Sam at bay. Give him absolutely what he is owed, but not a penny more. And I think that when we have this type of tax break, it's great. But the big thing I want to focus on is the tax aspect in general. If you're thinking about the largest bills that you're ever going to have in life, what do you think? As you're thinking about your life, the largest bills that you've ever had, what are the things that come to mind for you?
I would say probably overall, especially in retirement. You automatically think about, especially I'm a woman, I'll probably have to have long-term care at some point. That's going to be a big issue, the medical expenses.
Absolutely. If you think about all of them, so like you buy a house, you have to maintain the car. We got plumbing issues that cost, thousands of dollars, tens of thousands of dollars. But windows, I know, are unbelievably expensive because I've had to replace windows a few times. Believe it or not, all of those things just pale in comparison to giving anywhere between 15 to 50% a year to the federal government. And yet, most people do not have a standalone CPA specifically for the retirement finances. Guys, this is why we brought in CPAs and tax attorneys into our firm. We found that the average retiree that saved about $800,000 or more, the average, our CPAs and tax attorneys can save them hundreds of thousands of dollars over the course of their retirement. Not because we're doing anything slick or anything different. All we're doing is putting the right assets in the right buckets and pulling from them at the right times. It's literally that simple. It
Got
is
it.
not more complicated than that. And yet, most people do not understand it. Most CPAs, we have to train on this, not because they're not good people, not because they're not good CPAs. They don't focus on retirement income distribution planning. And that is of paramount importance. It's frankly, even if you do not have a financial advisor to manage assets,
Yeah.
you really should consider having a financial advisor when it comes to your taxation. A lot of people can do the asset selection on their own, whether it's Vanguard or Schwab, or they just love really dividend paying stocks. All that's fine. Most people don't even need a financial advisor for that because they're smart when it comes to finances. But the tax aspect is huge, and it is unbelievably overwhelming how much money that someone is leaving on the table by not doing that. That's a big deal. So where I see this as an opportunity for couples that want to have, I don't know, anywhere between $100,000 to $150,000 a year of household income in retirement. And by the way, if you think you can't do that, call my team. The point is that you would be surprised what you can do if you have the right planning in place. Not only protection, but how are we going to create the income? When we create the income, how's it going to be taxed? How much do you get to keep versus how much goes to the government? How much goes to your heirs once you're gone? Should you diversify with real estate? What other trusts should you consider using? All of those things come in, and that is usually outside of the parameters of a standard CPA, and certainly outside of the parameters of a standard financial advisor, or whatever these guys call themselves. But if you have a skilled fiduciary that has CPAs and tax attorneys on staff, all of this stuff opens up to create more opportunities for you to keep money in your pockets. So OBBA was big, not just because of breaks like this, but it opened up some of the loopholes that we used to see in the tax code that have not been around since the Clinton administration. We're talking quite some time. This has been on the books forever. It's not new.
Okay.
It just was not as attractive. We didn't have bonus depreciation. We didn't have certain regulations when it comes to real estate that we have now. And when I'm thinking about our clientele, and many of them have lake houses or houses in the South, or take your pick, there are so many things that we can do from a tax standpoint to utilize those assets to reduce taxation as a whole. People just don't understand it. So because they have their financial guy puts them in mutual funds and stocks and bonds and annuities and whatever, and that's fine. But then they have their CPA who basically just records last year's tax documents. Neither one of those guys are talking to each other. Neither one of those guys have any idea that you want to exploit the system and or just be the most efficient you can. And that's where we go in day one to look at how can we create a situation. It almost has nothing to do with products. It has everything to do with the process of making sure that if you've saved X amount of dollars, number one, we want to protect all that. But number two, how do we get to use more over the course of our lives and not give it away to the government? And when we're gone, how do we make sure it goes to our heirs and our beneficiaries and our churches and our charities the way we want and not to someone else? It requires real planning. But having said that, hundreds of thousands of dollars for the average bear if they get it right.
You so often speak to all the mental shifts we have to make when we move into retirement, and tax planning and how we look at taxes is just another one of those things that we have to change our perspective on entirely in this next phase of life.
Yes, it's changing the paradigm of thinking. I mean, most of us, we get a little bit aggravated when we see how much we pay in taxes, but we don't know what to do about it. And if we talk to our CPA, they don't want egg on their face. They don't want to say, well, I could have done all these things, but you didn't tell me when I had time. You only called me after the end of the year where I can't do anything about last year's taxes, right? So because of that, and they don't want to work in the off season. The last thing I've ever heard in my life is that CPAs want to go into work all summer long. They just don't. That's because that's their downtime. After tax season, they have awesome lake houses and they go do their thing and they enjoy it. But done correctly, the tax aspect of things could put more money in your pocket than any other thing you do, more than selecting the great stocks or the great mutual funds or the great annuities. It can add more money to your pocket than anything else. And there are real plans to get there. It just depends on what you want to accomplish.
If you have questions about how this new tax break for people over 65 applies to you, or other tax opportunities that you don't know about, how those apply to you and your income in retirement, let's get to work helping you understand. RetirementSolutionsShow.com is our website and where you can go to begin the conversation with John and his team at J. Hagen Capital. We also have links posted in the show notes. You got to change your perspective on taxes in retirement. John and his team, they are here to show you what your perspective might need to be for the road ahead. Again, it's RetirementSolutionsShow.com.